A little-known firm based in Hong Kong saw its share price surge by as much as 30,000% after listing its American depository shares on the New York Stock Exchange in mid-July. At its peak, AMTD Digital's market cap made it more valuable than US giants like JP Morgan, Walmart, and Visa. But as quickly as it had risen, the fintech firm's share price has since plummeted.
AMTD Digital was listed at an IPO price of about $7.80. It went as high as $2,555 and last traded at $212. At the share's highest point, the company had a market cap of more than $470 billion and was ranked the 15th largest stock in the world by market capitalization. It has since fallen to a market cap of about $40 billion on a share price of $212. This is still very high considering it had only 25 million revenue in 2021.
AMTD Digital said it did not know of any material reasons for the stock surge. The company offers digital solutions in financial services, media, and investments.
One possible reason is the company's low share float. In this case, AMTD Digital has just 19 million shares of free float, or just about 10% of total shares outstanding. There could also be a possibility of a short squeeze. So what's the short squeeze? It is when too many investors short the stock and then decide to cover their positions by buying back the stock.
Chinese investors call this demon stock. It means stocks that defy market logic. And such events may become more common when stock markets are dominated by technology firms whose overall worth is hard to quantify.
Many statistics actually show about 90% of the market caps in the S&P 500 companies today is actually in the intangible assets as opposed to the tangible assets that they carry in their books. If you look at the financial reporting standards, they only allow you to recognize certain types of assets and liabilities on your balance sheet. So there is a substantial part of the value that the business creates that is not necessarily reflected on a balance sheet.
Examples of intangible assets are patents, trademarks, brand image, and software. And such assets drive the growth of many companies today.
Intangible assets extend the category of assets and property that can be protected. You have intellectual property, which can be either registered or unregistered in nature, but you can also have intangible assets that extend to other types of non-physical assets like data, know-how, trade secrets, just to name a few examples.
While valuing traditional businesses typically look at the overall cash flow it generates at a certain economic cycle, finding out how much an innovative company is worth requires a different lens.
You have to be careful that whether it is really the value of the business or whether it is a price that investors are prepared to pay by looking at the IP, looking at the business plan, and the different variety of aspects that they could deploy that IP into.
In Singapore, segments like digital technologies and artificial intelligence have seen a rise in intellectual property filing.
We've seen over 2020 to 2021 at least a 10% growth in technology-related patents, which have a broad range, obviously, but you also see similar trends for trademark registrations, for example, in relation to technologies.
For firms, having intangible assets registered and disclosed could mean better growth opportunities.
If an invention is particularly novel or inventive, that obviously adds to the cachet of value that will attach to that. So I like to think that when you bring that into the mix, and then you consider licensing potential, collaboration potential with other professional expertise like valuers, you actually have in the making a very potentially effective product to offer to the community and the public at large.
Industry practitioners are working on guidelines to better measure intangible assets.
Understanding the role of intangibles is very important. There are lots of examples around where there's been a misunderstanding on that. Blockbuster, which those of us of a certain age will remember, where we used to hire videos and then DVDs, had the opportunity to buy Netflix for $50 million back in 2000, and it decided not to because it didn't understand the intrinsic value in the intangibles of that business.
The International Valuation Standards Council, or IVSC, is an independent global body that prescribes standards for practitioners. Its technical and ethical guidelines covering various asset classes are used in over 100 countries worldwide.
Really excited to
This year, the IVSC launched its Asia headquarters in Singapore, the first outside Europe, as it looks to develop global valuation standards for intangible and sustainability-linked assets.
When it comes to factors such as ESG, some of the concerns are lack of consistent data, lack of consistent regulation, lack of consistent standards in relation to these. At the moment, the approaches certainly to data vary so significantly around the world. We're currently comparing apples with pears.
Industry players say a consistent global approach to valuation will help investors become better informed.
Valuation is both an art and a science. What we are trying to do in professionalizing valuations and adopting standards and adhering to ethics, we're trying to bring it more towards the science than the art. Ultimately, the supply and demand in the market and the investor appetite determines what's the real price of a business and whether your valuation is getting into the right place.